Hindustan Zinc, that's the other one that came out with its set of numbers yesterday. The key positive for it was that the cost of production has fallen by close to around $200 per ton in the last 4 quarters. And that's something that the street liked. In terms of, the float that's available in the market is very limited. Vedanta has 65%, Government of India 30%, and a couple of institutions have 2%. So basically, there's only around 3% float in the market. But to understand what went on in the past quarter, and more importantly, this cost of production is looking good. What's the way ahead from here on? We are joined by Mr. Arun Misra, the Chief Executive Officer at Hindustan Zinc, who joins in on the show. Hi, Mr. Misra. Good morning, and thanks so much for joining in. Well, zinc prices have recovered sequentially, but part of the West is still a little bit sketchy in terms of growth and demand. What does this mean on outlook on zinc prices?
I think looking at Europe, recovery has not happened, and I think Europe will remain largely muted even in this quarter. The US is doing well and will continue. China has not fired its engines the way we thought it would, with the government announcing spending on infrastructure, and all that has not happened. So in all probability, next quarter also we would see a range between 2,500 to 2,600 only. Most probably between 25 to 2550 kind of a number, unless suddenly China starts consuming or in a big way. So it will remain. I think next quarter also we'll see a number 25 to 26 only.
So you're gradually ramping up your capacity. Can you give us a couple of guidelines? What kind of annual rate are you going at currently? How do you see yourself ramping up towards that 1.2 million tons by 2025? Give us any kind of timeline on how you see things improving.
So currently, if this is a mined metal capacity, we are absolutely at the level of 1.2 million ton of mined metal capacity we have. Finished metal capacity, this year we will meet the guidance. However, next year is the one when we will actually be trying out about 1.2 million ton of metal making capacity. It depends upon the business plan that we produce. We are currently working out the business plan. It will require quite a good number of low investment, quick payback, debottlenecking kind of projects to be completed. And so we are working that out.
Right. So talking about the silver fumer has got commissioned. What are the odds you sort of beat the guidance you've put out on board since the fumer plant is finally commissioned?
We are not changing our guidance on silver as of now, although fumer has been commissioned, but it has its own teething troubles. We guess it will stabilize in quarter 4. We are supposed to produce 30 tons of silver in a year. So if we get 1 quarter benefit, it would come to about 6-7 tons of silver only. So I'm not adding much to the guidance that we had given. Will remain largely at the guidance. Of course, next year when we do the production numbers of silver, we will see a better number than what we have produced this year.
Well, Mr. Misra, Coal India is ramping up production, so sourcing as well for you would be much better. Give us the current sourcing mix. What is the desired mix? And how much are you getting of what you want?
So from last year, last year, quarter 3, our cost was quite high, and from that we have come down by about $200 in this quarter, largely because we took structural steps in between. As I promised last year, our power plant were ideally designed for 23 to 30% of domestic coal only. We have modified the ESPs of the power plants, and now we are able to consume up to 45% of domestic coal. And it has helped us to reduce cost of power very, very drastically, and which is reflecting in the overall cost of zinc production that has gone down by $200. It will continue. We will, depending upon the availability, if I give you the number, in quarter 2, we had 45% of the mix was domestic coal. In quarter 3, however, it dropped to 30% based on the availability of domestic coal. So we are ready. As long as Coal India is able to supply us more and more domestic coal, we can consume up to maybe 50%, and the power cost will reduce further. Next year onwards, we will start getting the RE power, which will again reduce the power cost. So we are looking at structural cost reduction and journey to $1,000 kind of a number going forward, maybe year next.
Since you mentioned $1,000 per ton cost of production, Mr. Misra, by when do you get there?
This quarter we are at about 1,095, so we are quite close. Less than 1,100 number now we have come. So it's just maybe next year when the RE power comes and coal quantity increases, we should be close to $1,000 by next year.
So is there any fresh proposal to buy Vedanta's international zinc from HZL?
We are focused on growing Indian business and Hindustan on the Zinc International business. We have recruited a very capable CEO to run that business and grow that business. So they are growing on their own, and also our copper mines in Zambia starting up. But that's for Vedanta to comment. As far as Hindustan Zinc is concerned, we are not currently looking at acquiring that property anymore as of now.
Well, your shareholders will be happy, if you're not going to be doing that. But give us some more details. By when can we see action on that segregation of entities like silver?
Our design is ready. It's not an issue. And for Hindustan Zinc, segregating into two different businesses, zinc and lead and silver separately, is very much easier because the ownership pattern doesn't change. Most of the silver comes from SK mine. Most of the silver gets produced through Dariva smelter. So assets are also earmarked. It's just working through the papers. As far as ownership doesn't change, government's holding doesn't change, flow of dividend doesn't change. So it's much easier work than what we think.
Mr. Misra, give us a little bit more. Give us a timeline. By when will you be able to close out this segregation of businesses?
We should get government's nod by next board meeting, which is in April, and then by first quarter we should be able to close the work.
So by when will you be able to close this segregation exercise?
Our ability to generate cash has not changed. It's a question of without spending the cash and keeping the cash in cash reserve. So now we are also investing in our growth project, like we are putting up another roaster, we are putting up fertilizer plant. So all that investment we are making, at the same time we have given dividend. Our ability to generate 49-50% EBITDA does not change. We are one of the lowest cost producer among the top 10 zinc making companies in the world, and we'll continue that cost position. So nothing changes as of now. Giving dividend, not giving dividend is a matter for the board to decide. I will leave it at that.
But you'll have to give us some outlook for FY24 on the dividend front, that given that there's now no big cash balance on the books.
That's for government to decide. To me, if you ask me, if we allow the demerger to happen first, then perhaps the disinvestment of the OFS will be much easier to disinvest part of silver company and part of zinc and lead company separately to separate set of buyers.
All right. Thanks a lot for joining in. Appreciate your thoughts. By the way,